India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
I, Manmohan Singh, do swear in the name of God I am not going to be a candidate for the Prime Ministership if the UPA were to come back into power. माना कि तेरी दीद के काबिल नहीं हूँ मैं, तू मेरा शौक तो देख, मेरा इंतजार देख.
Good morning. Welcome to Morning Call, live from the CNBC-TV18 Motilal Oswal studio. I'm Lata Venkatesh, and with me is my colleague Surabhi Upadhyay. We, of course, are starting on an extremely somber note. My career in journalism started in 1991. Well, it started in May, but in June came the big budget announcements. I was too much of a cub reporter to understand much, but today we understand the magnitude of both the contribution and the loss.
Lata, good morning to you. Good morning to all our viewers. I'll tell you this, from our standpoint, we were much, much younger, only in school. So we didn't understand the magnitude of what the Indian economy was going through till much later, till college and beyond. But we saw the changes that the man who's before us on the visuals right now, the changes that he ushered in, the opening up of the economy. Suddenly we had, things like satellite TV, foreign brands coming in, more choices as a consumer. And all of that being architectured by Dr. Manmohan Singh, invaluable contribution to the Indian economy. But you've seen him through the years, and from finance secretary, from being the deputy chairperson of the planning commission, to being the former governor of the Reserve Bank. Just take us through some of your thoughts and your imprints.
Okay, on a very personal note, I was in college when he was governor, and he was invited to give away prizes. And I have got an elocution prize from him. That was, at a time when you're too raw to understand the magnitude of changes that were happening. But like I told you, my first day in journalism, or first month in journalism, was when this massive liberalization happened. But let me go back. Even as Governor, Reserve Bank, I think he put in some pillars which we now take for granted. As soon as he came, he asked Dr. Sukumar Chakraborty, at that time, by far the best economist we had, to go through the CRR SLR rules. And it was Sukumar Chakraborty who wrote those rules because Dr. Manmohan Singh asked him to. That contribution of Manmohan Singh is not realized, that he literally built some of the building blocks of the Reserve Bank and the banking system even today. And then, of course, as you pointed out, Deputy Chairman of the Planning Commission advising the Rajiv Gandhi government. But the biggest part, obviously, was in 1991. We must understand the magnitude and the courage of what he did. India had enough dollars to pay for 3 weeks of oil imports. That's it. In the face of that, he, along with Dr. Rangarajan and the other important decision makers of the time, and of course, Prime Minister Narasimha Rao, they actually brought down the import controls. Import controls were put in because we don't have dollars. Yeah. He brought down the import controls, the courage, so that the imports come in and you're able to export. All export is, value addition to imports, to make that very brave decision. And then, of course, they gave us every one of our markets. At that time, deposit rates and lending rates were administered by Reserve Bank. Banks didn't set them. It was under Rangarajan and Manmohan Singh as finance minister that those were freed. Foreign exchange, the Reserve Bank set what will be the value of the rupee every day. They put in something called the LERMs, liberalized exchange rate mechanism, whereby 40% the exporters surrendered to Reserve Bank at a fixed rate, but remaining 60 went to the market. And in over 1 year, the entire exchange rate market was liberalized, something China has not been able to do even today.
Yeah.
We have a free exchange rate, at least on the current account. Likewise, the government securities market, the government could borrow any amount. It was called the ad hoc treasuries. Just say that we are running short of 50 crore, they would issue those treasury bills. Banks had to buy them because they were all nationalized. He stopped the ad hocs. And I remember the press conference, he came to Bombay University, and I went there part as a student, part as a reporter. The economics fraternity was very proud that, one of them, an economics professor, had become finance minister. He explained to us how the government was putting curbs on itself. And a government securities market was born. But let me not run away with my impressions as a young cub reporter, because we have two people joining us who have worked with him very closely. Joining me now is Dr. D. Subbarao, former governor of the Reserve Bank, and again, former secretary, known him very well, and Dr. Raghuram Rajan, again, almost a disciple and a protege of Dr. Manmohan Singh in many ways. Dr. Rajan, Dr. Subbarao, thank you very much for joining us. Dr. Subbarao, first, your thoughts. I think you were with him in 1991, weren't you?
Yes, I was in the Ministry of Finance in 1991. But I was a mid-level officer. I didn't work directly with the finance minister. I was 4 or 5 layers down. But you could see the difference in North Block when Dr. Manmohan Singh had come in as finance minister, because for 2-3 years before that, we were struggling with our foreign exchange balances, balance of payments, etc. And the electric energy that Dr. Manmohan Singh's induction into the finance ministry brought into North Block was very, very palpable. And of course, all the reforms that you just talked about happened I think, in the first 3 months of his becoming finance minister. They were truly transformative.
Dr. Rajan, thank you very much. I guess it's late evening from where you are. Tell us your first impressions. I guess he was, in a way, a guru for you.
Well, it certainly is a sad day. He was an economist in a sense, because as you pointed out, in the initial reforms he carried out, you had to have faith in the theory, that the theory would work, that in the face of a currency crisis, you liberalized imports. Ordinarily one would think that would suddenly boost imports and you would have more of a problem. But he saw that as part of a package which would set India on a new course. And I think, we've had 3 decades of robust growth since then, 6% by and large, something nations would kill for. And I think he laid the foundations for that, of course, along with Prime Minister Narasimha Rao.
Dr. Subbarao, the birth of the middle class was also because of him. In the previous years, you couldn't import a television set, a refrigerator, nothing. I mean, everything was, I think, 250% imports. If you could tell us how literally a middle class got created at that time.
First, like you said, the economic reforms, there were 3 things that were done. First was liberalizing imports that you talked about. And as Raghu just said, that had a transformative impact on indeed the entire country, but certainly on the middle class, because they suddenly felt rich about, the income transfers that had taken place. The second thing was delicensing of the industry. And the third was the government moving away from public sector investment. I think those are the 3 pillars of the economic reforms carried out in 1991. Liberalizing imports, like giving up the ideology of self-sufficiency. The second was delicensing industries, and somewhat giving up the faith in public enterprises and reimposing faith in the private sector. I think that did a great thing, especially, for certain parts of the country. Like, we used to think of India as a divided nation, east-west divide. The states to the west of that land, Maharashtra, Gujarat, etc., prospered. Before reforms, much of public investment went into the eastern part of the country. because that's where public enterprises investment took place. But when reforms happened, the whole country got integrated. A lot of private investment had come in. I think the middle class certainly saw that as a transformative experience.
Okay.
Well,
Dr. Rajan, if you have to write an obit as to what India would remember him or should thank him for, what would they be?
Well, I think we've already talked about the initial reforms when he was finance minister. I mean, that is huge, and it still plays out today. But I think we should also remember that in his term as prime minister, we had some path-breaking legislation, which went as much to redistribute the pie as it was to grow the pie. Indeed, he had a lot of success growing the pie. His years in office were years of extraordinary growth, despite the global financial crisis intervening in the middle. But you must also remember that Narega was in his time. It's been a huge source of support for the rural poor, especially in bad times. It was what helped them through the COVID pandemic. We also had the National Food Security Act, again, a very far-sighted act which has helped our very poor keep body and soul together and reduce, to some extent, we need to do more, of course, on this, the extent of malnutrition, which has been a curse for this nation. But also, apart from those, distributive reforms, he also put in place the right to information. I think that's a far-seeing act, one of the few acts by governments post-independence which have curbed their own power and given more power to the people, giving people the right to ask questions of the government. So I think people will see in time his prime ministership also as on par with his term as finance minister.
No, absolutely, Dr. Rajan, take your point completely. And I was actually coming to just that. His legacy as the Prime Minister and the decade that we saw under him, you, of course, enumerated a lot of the legislative reforms that he ushered in, and many of them continued. I mean, irrespective of the governments that came after, many of this still continued. So that's something that we remember as well. But I just want to understand that from your perspective, your lens, and also your time at the Reserve Bank of India, how did you see industrial policy shape up in the 10 years that Dr. Singh was Prime Minister? We had the animal spirits unleashed, but then we had this great global financial crisis hit the world. So how do you see those years and his contribution to industry?
I think that would be to Dr. Subbarao.
Dr. Subbarao Dr. Subbarao and Dr. Rajan, because, after that, we also talk about the excesses and then, the bad loan problem and the AQR that Dr. Rajan, of course, was spearheading to clean up the balance sheet. So I just want to get both of your gentlemen's views on the economic, the industrial policy and the economic measures that really shaped industry in that decade under his leadership as Prime Minister. Dr. Subbarao, let me come to you first.
Yeah, first, as I said before, we moved away from a faith in the public enterprises. Private enterprise was given a big boost, and that was had a great impact. Second, import delicensing and industry delicensing. I think that contributed to the rise of entrepreneurism across the country. For a long time, there was demand for entrepreneurism. There was supply of entrepreneurism, but the demand and supply did not meet. And I think those reforms helped give rise to entrepreneurism across the country. I could see I was, working in the state government for many years when we were in the pre-reform period. And I could see that there was a lot of entrepreneurism in the country, but that did not have any encouragement. So what the reforms did was to unleash this burst of entrepreneurism. And second, delicensing meant that private enterprise could go whatever to, before reforms, the government decided who should invest, where investment should take place, how much they should produce, at what price they must sell. I think that changed with the reforms, with the industrial delicensing. And with imports, with import decontrol, industry could import whatever they wanted. That got a fillip for exports as well. So, and during my time as governor, there was this big issue about foreign direct investment into single brand retail. And RBI was unconnected with that the policy. But Dr. Manmohan Singh called me one day and said, can I have RBI's opinion on this? I was a bit surprised because that, of course, as I recall, was quite contentious and controversial. But he had that regard for the RBI, and he asked for the RBI's opinion on FDI into retail, how the government should approach that. So I think Dr. Manmohan Singh had a great impact on the rise of entrepreneurism across the country and on getting foreign investment into the country and thereby improving technology within the country.
Yes, absolutely. FDI and retail. Thank you for putting that on the table as well and jogging our memory again. That was another one of those landmark changes in policy that was finally sort of ushered in to get foreign investment in the retail sector as well. Dr. Rajan, now coming to you, you were of course always a keen India watcher. You were watching a lot of this policy play out. What were your observations of the Indian economy, Indian industrialists, the Indian capital markets during that time? Because it was also simultaneously the time where you were watching the excesses of the West build up in your famed and acclaimed paper where you warned of the GFC. So how did you view India and the changes that it was undergoing in that decade?
Well, first, before the global financial crisis, we had very strong growth. And, Dr. Subbarao came in just when that ended with the global financial crisis. Unfortunately, what happens in banking sectors is first, there is euphoria after successful growth. Bankers were telling me about that time when they were running after sort of entrepreneurs with checkbooks. And we financed a lot of investment. That was a period when India was really investing an enormous amount. And of course, with the slowdown in the global economy, with the slowdown in the Indian economy, some of those investments did not come to fruition, and bad loans started building up. But if you integrate over the entire period of Dr. Manmohan Singh's prime ministership, growth was quite substantial, and there was a recovery which was coming into play towards the end of his time, brought about by sensible policies in response to the global financial crisis. To some extent, we had a substantial amount of fiscal stimulus in response. Perhaps we stimulated too much, but we started tightening. Mr. Chidambaram came into the finance minister's office, and we saw a tightening of the fiscal, perhaps just before the taper tantrum hit us. Helped us manage the taper tantrum somewhat better because of those policies.
Yeah. We're just wanting to wind up, Dr. Rajan and Dr. Subbarao. I want something personal that you'll remember, since you all knew him so well personally. Dr. Rajan, I remember, I think he called you Raghuraj Raman always. He never got your name right. I remember once when he was inaugurating the RBI archives before you were at that time governor designate. Any personal things that you want to remember? He almost mentored you at that time.
Yeah, no, he was obviously a very astute economist, but he was also politically very savvy. Which doesn't come across because he was such an understated person. But to do what he did, to accomplish what he did, you have to have a good sense of the political environment also. On a personal note, what I remember most is an episode which I've recounted elsewhere also, where, in the middle of, I think it was 2012, Dr. Subbarao will remember because he was on this panel with me. We had been invited by Ishwar Ahluwalia to talk about, so many years since the 1991 reforms. I think it was a book release. There were 5 panelists, Dr. Subbarao, Ishwar Ahluwalia, T.N. Nainan, me, and Dr. Manmohan Singh. Okay. And, Dr. Subbarao was very, very circumspect because he was RBI governor. But 3 of us were very insistent that the economy was going off track. And Dr. Manmohan Singh was the last speaker, and he listened to all the criticism by his friend, Dr. Ishwar Ahluwalia, and me, who I was sort of the informal economic advisor to him. And he said, look, you have said all important things. I need to reflect on this, think about it, and do what is necessary. He didn't take it badly. He didn't react. He wasn't defensive. He just took the criticism. And later he acted. I think, he did a number of things, including bringing back Mr. Chidambaram into the finance ministry at that time. That was the character of the person that, even as prime minister, he was open to criticism and actually was willing to hear it and act upon it. He never was defensive. He never wrote a book about his life in office, defending the various policies. I think that really suggests somebody who was different and unique.
Fair point, Dr. Rajan. Thank you very much for joining. Dr. Subbarao, any personal anecdote?
Yeah, sure. What I remember about Dr. Manmohan Singh is that he was a great listener. Even if you told him lots of things that he already knew, he listened very patiently, if he might get a new nuance or whatever. I thought that made him a great leader. The second thing was, I think Dr. Manmohan Singh had great regard for the Reserve Bank of India. He'd understood that the Reserve Bank is a treasure trove of knowledge. If he wanted an opinion from an outside government source, he always sought the RBI's opinion, like I said, about the FDI and single brand retail. He sought our opinion about the land acquisition bill. He sought our opinion about the NREGA expansion. And you also, once he asked me sometime, about 6 months after I'd got into the Reserve Bank, why is everybody talking about the Reserve Bank policy? And I just kept quiet. Then he said, something as if he spoke to himself. He said, the RBI is a great institution. Everybody should not be talking about what the RBI ought to be doing. And I don't know what he did after that, but within 2 weeks after that, people stopped talking about RBI policy. But one thing I remember very well about him, a personal anecdote, when I was appointed governor, I went to call on him in his North Block office. There were just the two of us. It was just a short meeting, 15 minutes. And we talked about, the financial situation, the economic situation, my experience as the finance secretary. We compared his experience as finance secretary with mine. We talked about living in Mumbai and living in Delhi. And after about 7-8 minutes into this conversation, I told him, sir, you were governor yourself. So do you have any advice to give me? A humble man, he said, what advice do I give you, Subbarao? You know the country. You served in the IAS. You served at the state level, at the national level. You know the RBI as well. Do your best. I'm sure you'll do very well. And then I took leave of him. And as I was walking towards the door, he graciously walked from behind his chair, escorted me to the door. And as I half opened the door, he put his hand on my shoulder and said, Subbarao, I changed my mind. You sought my advice. I just want to give you one bit of advice, and which is this, that, when you go into the RBI, you will get so immersed in numbers like money supply, credit growth, inflation, interest rate, repo rate, that you will forget that there are real people behind these numbers. Always keep your ear close to the ground. Now, when I walked out of his South Block office, that advice disappeared from my mind within about half a minute. But when I came into the RBI, I started working. In about 6 months, I realized the import of Dr. Manmohan Singh's advice, because what he was really telling me was that the mandate of RBI is inflation. Inflation hurts poor people more than it hurts others. Yeah. It's a regressive tax. So, do remember people behind the decisions you take.
Thank you, sir. Thank you, sir, for narrating that beautiful incident and reminding us also that these are not numbers, but there are real people behind it. Dr. Rajan and Dr. Subbarao, we haven't finished, of course, speaking about him. but we have a trading day ahead. I just remember this, Dr. Kelkar, I think, was saying this, that he was one of those few people who brought in people like, Raghuram Rajan, Monte Kaluwalia. He went out and told people, that's not your job as finance minister, but he would go out and tell Indians who were doing very well abroad that you should come in and join government. And I think he was personally instrumental in many of these intellectuals who later became policymakers.
No, I just want to say what a beautiful story. And Dr. Subbarao, thank you for sharing that for us. And it's so poignant and so timely as well, right? That tussle between growth and inflation, which is always, going to be discussed around the Reserve Bank of India. It's as relevant today as well. We've got a new man at the helm, and Dr. Shaktikanta Das. We remember, I'm far newer into this than Lata, but we remember the last several, RBI press conferences and speeches till today. It's been all about whether consumer level inflation is really hurting or not, and whether the RBI should be concerned about it or not. So thank you very much for reliving those memories and for sharing those anecdotes with us. Dr. Rajan and Dr. Subbarao, thank you so much for joining in and paying your tributes and your homage as well. We will take a quick break on that note. Lots of other voices coming up. And our research team is also standing by because we do have, of course, a trading day to get to. So we'll quickly come back with some of the market cues of the day and the stocks you need to watch. Welcome back. So, let's now quickly take stock of the cues of the morning as well. Just to put this on the table, we had a very flat close overnight on Wall Street. Asian markets this morning are, tracing a little bit of red and green both. We've had some important data points, one from China, which is negative, which is the industrial profits number. It is, again, a fourth month of decline over there. And the inflation numbers out of Japan are also quite concerning. Tokyo inflation has now touched 3%. So the market is digesting a lot of this macro, but otherwise trade has been fairly thin. And you can see, it's between green and red, not very clear directional cues.
One important handover for us is that we thought it was a thin trade yesterday, but there was 2,376 crore of FPI selling, and that's why the rupee went down to 85.27. So this buying of dollars was not only by importers, oil importers, as we were told, but clearly foreign investors were also buying. For the record, today the dollar index should come up for you at 108.14. There is no change. At 4.57, the 10-year yield is just 3 basis points below what it was yesterday. So pressure on the rupee should definitely continue.
No, absolutely. The domestic institutions, they did offset that selling by buying in excess of 3,000 crores. But the fact is that you're still getting, at such a fag end of the year, you're still getting over 2,000 crores of selling on a daily basis. That's something that we really cannot take our eye off. That's the dollar index. Yields have been fairly range-bound after the jobless claims data. Okay, so now what about stocks? Well, let's take it to our team then, starting off with Vinny. Vinny, Jubilant FoodWorks, they've inked some sort of a deal with Coca-Cola, right? Tell us more.
Absolutely. So yes, the company has signed this MOU with Coca-Cola and they'll be purchasing its portfolio of sparkling beverage products. So yes, they will include some of the products like Coca-Cola, Fanta in among some of the names. And what more is there? That in terms of clarity is what we're waiting out for. Now this MOU is expected to take place between the parties and start from 1st of April 2025. This will allow Jubilant FoodWorks to sell Coca-Cola products across a brand. So they do have Dunkin', where also they can sell these products as well. So keep an eye out. Dunkin', Domino's, all their brands, they can sell across that. Now, do not forget, on 13th of December, Jubilant FoodWorks' parent company, Jubilant Bharati Group, had announced acquisition of 40% stake in Coca-Cola's bottling subsidiary, that is HCCB, that is Hindustan Coca-Cola Beverage. So that is an important one to keep an eye out on. And we're keeping an green coming in for Jubilant FoodWorks today on the back of this MOU.
Okay, thanks a lot for that, Vinny. We have Upasana joining in with a bunch of stocks that she thinks is in news. Upasana.
Good morning. First up, let me start with Dixon Technologies. The company's subsidiary, that is Dixon Electro Manufacturing, has entered into a MOU with Cellcore Gadgets Limited. And mind you that the MOU is mainly for the manufacturing of refrigerators and other related components of Cellcore. Next up is RBL Bank. The bank has participated in the IPO of DAM Capital via OFS, which opened between 19 December to 23rd December 2024. Now, bank has divested its entire 8.1% shareholding in DAM Capital, and following this transaction, bank does not have any equity shareholding left in DAM Capital. That's why even this stock will remain in focus. Choice International also in focus. The company has received in principle approval from SEBI for setting up mutual fund company. And lastly, Mafatlal Industries also in focus on our radar. The company has been awarded an order worth 60.7 crores by Odisha government in health and hygiene space, and this order is mainly for supply of sanitary napkins to various government schools and state medical cooperation network in the state of Odisha. So all these stocks will be closely watching out today in today's trading session.
Okay, all right, Upasana, thank you very much for that. Coming to Vivek now, who's also watching out for a couple of names today. Vivek, good morning.
Well, good morning. A couple of stocks on the radar. NHPC, well, the all-important power projects that are yet to materialize and commence operations. Well, the company has provided an update as far as when operations are expected to commence. So first up, we're talking about the Sumansiri Lower Hydroelectric Project. The company earlier, which mentioned that 3 units of 250 megawatts were expected to be completed by March 2025. They pushed ahead the timeline, and it's now expected to be completed by May 2025. And the remaining 5 units, the timeline remains the same at May 2025. Along with that, as far as the T-Star 5 power station is concerned, the material damage laws as well as the business interruption laws, both of them have been upped higher. So some red as far as NHPC is concerned on the back of slight delay as far as commencement of operations is concerned. The next stock on the radar is Gujarat Fluoro. A whole host of board approvals made in the board meet yesterday. First up, slump sale of the power undertaking of the company to a new platform called IGREL Mahidad. Along with that, the company will be investing via equity stake in that particular platform itself. And they've also gone ahead and signed a PPA with IGREL Mahidad to go ahead and purchase power. Now, along with that, there is also a wind energy subsidiary that the company has done a similar set of deals with. The company would be investing close to 200 crore via subscription to equity shares of Flurry Wind Energy, and they've also signed a 350 megawatt power purchase agreement with the wind energy arm as well. And lastly, power projects will be in focus. The company has secured a 186 crore order from Jayaprakash Power Ventures. The company will mainly be providing operation and maintenance services to the JP Nigri Super Thermal Power Plant, and this is for a period of 5 years.
Okay, thanks a lot for that, Vivek. Please put all those stocks on your radar. But I think one of the most important statements that came yesterday, which the market should take note of, but it may not be an impact immediately, is the report on trend and progress in banking. It's a very important annual document which the Reserve Bank puts out looking at the health of the banking system. And yesterday it had some warnings. Abhishek is here to tell us the key takeaways for banks from the RTP, as we call it, report on trend and progress in banking. Abhishek.
Well, Lata, as you mentioned, the health of the banking system is one of the best that we are seeing in last 13 years is what RBI has mentioned in its report. However, RBI has again flagged concerns on unsecured loan exposure cap that they had prescribed earlier for lenders. RBI has also said that they will consider removing prepayment penalties on floating rates that has been given to loans to small borrowers. In terms of unsecured portfolio, they say that some entities boards have fixed a very high ceiling for unsecured loans. This needs to be continuously monitored, and that is why RBI has urged private sector banks to bring down that unsecured portfolio, as well as the fact that they have asked RBI banks to bring down the employee attrition rate as well. Now RBI says that they will impose more regulatory curbs on unsecured lending of lenders if at all lenders do not mend their ways. Despite raising the risk-weight assets on unsecured loans, RBI is worried that it still forms about 1/4 of the total commercial banks loans as of FY24. So RBI has warned about malpractices in digital lending space as well. They say that they are in the process of setting up a repository digital lending apps to curb these manipulation that is there in digital lending scape. Back to you.
Okay, all right, Abhishek, got that. Thank you very much for putting that on our radar as well. But Abhishek, IndusInd Bank, there is some news around their MFI portfolio. Tell us more.
Well, IndusInd Bank has decided, to put microfinance loans worth about 1,573 crore to sale to ARC. Typically, in a microfinance loan, when you sell down to ARC, the recovery rate is lower than other secured products. So, if you take a look, the reserve price has been put at 85 crore for this 1,573 crore worth of loan, which is about 5.4% of the total stress pool that they intend to sell. The gross NPA in MFI portfolio was about 2,260 crores. So as of Q2 FY25, hence this number of 1,573 crores forms nearly about 70% of MFI NPA. We don't know what was or what would be the NPA in Q3. So this would be an accumulated NPA wherein the provisions have been made by the lender as well. So calculation shows that the average ticket size wherein they are selling this NPA would be around 14,820 per share, which is in line with the industry trend. Back to you.
Okay, got it. So this is an important development. I mean, they're trying to clear a large chunk of the, stressed assets on their MFI side of their book. So the market should take that positively. Of course, they probably won't get top dollar pricing for it, but then that's how it works when you're selling bad loans to ARCs. But thank you for that, Abhishek. Let's quickly recap our list of stocks to watch, the ones that have positive news flow. Our Jubilant Foodworks, Dixon Technologies, Choice International, RBL Bank, Mafatlal Industries, Gujarat Fluoro, Power Mech Projects and IndusInd Bank, while stocks with negative news flow would be, of course, overall banking stocks on the RBI caution as well as NHPC.
On that note, I think we should take a quick break. We've got more experts and, economists of yesteryears joining us to pay their tributes to Dr. Manmohan Singh. We will be speaking with Dr. Narendra Jadhav, who was former chief economist at the Reserve Bank. We will also be joined by Dr. Arvind Panagaria and a whole host of economists. Stay tuned. We are back in a jiffy. Welcome back. We have been hearing a lot of former RBI governors and economists who have worked with Dr. Manmohan Singh and have a lot of personal and professional anecdotes to share. Joining us now is Dr. Narendra Jadhav, former Rajya Sabha MP, and of course, I knew him as former chief economist of the Reserve Bank of India. He was also former Planning Commission member. Dr. Jadhav, good morning. Thank you very much for joining us. What would you say, sir, is the legacy of Dr. Manmohan Singh?
Well, Dr. Manmohan Singh was a great visionary. I consider myself fortunate to have been associated with him for more than 30 years. And he was not only my guru, he was my mentor. And he was like an elderly person guiding me through my entire professional career. Our association started with his days in RBI as the governor, and it was there until we were together in the Rajya Sabha as the members of parliament. In the interregnum, lots of things happened. I think his main legacy that he left behind is the new economic policy. What was new for us, it was not new for the world. When India faced an unprecedented macroeconomic crisis, when fiscal deficit had gone beyond any reasonable limit, when the inflation was in the range of 18-19%, and when the foreign exchange reserves of our country had dwindled to a level of less than $1 billion. That was the low point, one of the lowest points in India's economic history. And that is where Dr. Manmohan Singh came into the picture. He was made appointed as the finance minister. And as the finance minister, not only he turned the corner, not only he changed, he set the recovery in motion, but he introduced reforms which were known to others but never introduced in India, what they summarized as liberalization, part privatization, and globalization. In particular, in the budget, in his very first budget, he dismantled all the controls or most of the controls which were holding back the entrepreneurial spirit in our country. What he did was, the entrepreneurs, their hands were tied, their feet were tied, and they were told to perform. How were they going to perform? Dr. Manmohan Singh, in one stroke, got away and freed them, the entrepreneurial spirit, which was always there, but kind of tied down because of the earlier policies. That was changed, and the new economic policy started on the liberalization, privatization, globalization. He also led the country to reach the highest economic growth that we have achieved, 9.3% in 2007-8, when the global meltdown came. And his entire tenure as a governor of RBI, as a finance minister, and then later as a prime minister for 10 years, all these areas, he has left an imprint of a honest patriot who is perfectly professional, one who is open to criticism, and one would change the policies. He was soft-spoken, but his resolve was always firm. He could be talking hard. Remember what happened to the nuclear agreement. He could take strong positions, and it has been a blessing for me that throughout my professional career, his helping hand has been there as a guru or as a friend, philosopher, and guide. In fact, he called me a friend. And may I take this opportunity to speak about some personal anecdotes?
Well, Dr. Jadhav, we will have a more elaborate conversation later on in the day. Thank you very much. We have a string of guests waiting by, but thank you very much for the very beautiful way in which you wrapped up all his qualities. Economist, professional, and yet an extremely humble man. Someone who was very soft-spoken but very hard in his decisions. I think you put it extremely well. Thank you very, very much, Dr. Jadhav, for the tributes you are paying to Dr. Manmohan Singh. It can only be done by someone who knows him so intimately and who knows the Indian economy so intimately. We are awaiting more guests, and we should be shortly joined by Mr. Ramesh Damani, someone who has benefited as a veteran stockbroker from the reforms initiated by Dr. Manmohan Singh. We are back in a minute after a break. Okay. Well, we are going to start trading in about 15 minutes, and the implied opening is suggesting a bit of green, but we'll have to really wait and see. The expectation was that yesterday, since it was Nifty expiry of the December series, we should have had, a higher close, but that was not to be. So now I'm extremely skeptical about the green shade over here. Of course, Asia is in the green, and therefore there is some hope of a green start. But chances are the way in which the rupee has been falling and that nearly 2,400 crore of selling that we saw yesterday indicates that there is going to be pressure both on the currency and on the stocks, even at the fag end of the year. They are taking an off, but not an off from selling the FPIs.
And that has been absolutely staggering, right? The fact that even on the 26th of December, you're still getting selling in excess of 2,000 crores. So those are the cues. I mean, they're fairly thin, but we'll only have more clarity, I think, once, we get past the new year. But what's very, very clear is that there is some internal weakness in the market because there's no Santa Claus rally. The market opens with a gap up and then it gets sold into. We've not been able to take out our 200 DMA. And the mid-cap market has been, at least at the advanced decline level, it's been weak. Individual stocks, of course, have been moving around quite a bit. By the way, there are 5 listings today, so let's not lose sight of the hectic action in the primary market, even as the year is closing out. From DAM Capital to, a couple of other names as well, Santham, there'll be plenty of action in the primary markets as well. As we get to our next set of guests, let's actually listen into some more tributes that have been coming in memory of Dr. Manmohan Singh. Hear out some thoughts from Jairam Ramesh, Ashwini Kumar, as well as Ghulam Nabi Azad.
I worked with him in the Planning Commission. And then I worked with him when he was finance minister. Then I worked with him when he was out of power in the Congress party. Then I worked with him when he was prime minister. So for 36 years, I've worked with him very, very closely, very intimately. Very many memories of our association. Well, what can I say? He led a full life. It was a full life, extremely full life, and it was an extraordinarily distinguished life. Chief economic advisor, chief economic advisor, finance secretary, member secretary, Planning Commission, governor, Reserve Bank of India, deputy chairman, Planning Commission, finance minister, prime minister. I can't think of anybody in India who's had all these posts.
डॉक्टर मनमोहन सिंह जी का निधन देश के लिए केवल एक क्षति ही नहीं मगर एक कोलोसल ट्रेजेडी है। उस वक्त उनका जाना जब देश की राजनीति एक ऐसा मोड़ ले रही थी जो ले रही है, जो मैं समझता हूं देश के भविष्य के लिए अच्छी बात नहीं है। मेरा ये मानना है कि डॉक्टर मनमोहन सिंह ने अपनी सादगी और सरलता के चलते हुए और उसको बरकरार रखते हुए देश के लिए कुछ ऐसी उपलब्धियां की हैं जिनका आने वाले कई सालों में चर्चा रहेगी। इंडो यूएस सिविल न्यूक्लियर डील एक ऐसी उपलब्धि थी। राइट टू इंफॉर्मेशन और जो फूड सिक्योरिटी एक्ट है, ये बहुत बड़ी उपलब्धियां हैं जिनकी आज अगर पूरी तरह पहचान नहीं है तो आने वाले सालों में होगी।
डॉक्टर मनमोहन सिंह जी के निधन पर बहुत ही अफसोस हुआ। वो मेरे ख्याल में देश के पहले प्रधानमंत्री थे जो इकोनॉमिस्ट, और उनकी छाप पूरी दुनिया में पड़ी। उनके इकोनॉमिक लिबरलाइजेशन के लिए, जिससे हिंदुस्तान का इकोनॉमिक नक्शा ही बदल गया। आज उनके क्रिटिक भी उनकी तारीफ करते हैं।
All right, lots of tributes coming through. And now let's talk to someone who has seen the Indian economy undergo through the massive change and has seen the Indian capital market sort of rise up and salute that as well. We have Ramesh Damani, veteran of the Indian capital markets, joining in on this somber morning. Thank you so much for being with us, Mr. Damani. We've been asking from Dr. Raghuram Rajan to Dr. Subbarao what their reflections have been on the greatest legacy of Dr. Manmohan Singh. I'll put that same question to you. Your thoughts?
Yeah, thank you. You're right. It's a very somber morning, and it's a bittersweet morning because a lot of the India we are experiencing today is thanks directly to the work that Dr. Singh did as finance minister starting in 91-92. In fact, if you recall his economic speech on the budget, a French essayist, philosopher, and poet, when he said, "No power on earth can stop an idea whose time has come." And the idea he was referring to was of India rise in the global high table. And 30 years later, as you look back at his life and legacy, it's exactly what he did. The kind of reforms that he introduced, scrap the license Raj, move to liberalization, reduce income tax rates, reduce the duties on imports. Extraordinary amount of changes that happened only under his penmanship as finance minister. So when we look back at his legacy, it will be one of the more profound legacies. And I think, to paraphrase Winston Churchill, never in the history of Indian economic consequences so few and so much for so many. I think Dr. Manmohan Singh is that legacy.
Yeah, I agree with you, Mr. Damani. I was a cub reporter in 91. My first, I joined a month before that marathon budget or that revolutionary budget. How was stock markets before and after the Singh budget? And what can you say of the markets in the 90s and in the 2000s when he came back as Prime Minister?
Yeah, I mean, to date you exactly, that's the date. That was the first budget that he penned, where I quoted all those things for you. It was an extraordinary budget. I mean, the index was, I think, a few thousand points, sensex, on its way to 4,500, the first great bull run of the Indian stock market. 80,000. Securities and Exchange Board of India was nominated under his finance ministership at that time. He just played such an important role in the development of our capital markets. More importantly, he was the first FM disinvest PSUs in the early 90s, and today the market is bull run is being led by PSUs. So there's a string of economic legacy that history will have to judge what took place. But I have no doubt that when the chapter of Indian economic reform is written, the first and the most important chapter will be devoted to what Manmohan Singh unlocked for this economy.
Absolutely, sir. I wish we could get you on a clearer note, but thank you very much for those initial tributes. We will, of course, continue through the day and hope to get you on a better line and maybe on a Zoom call as well. I know everyone's far away in their holidays. Thank you very much for joining us. I think that point is very important about public sector units. He professionalized public sector units, but after 91, we never nationalized anything.
Yeah.
We were only denationalizing. We gave private bank licenses. The whole chapter changed. The era of public sector was professionalized, and thereafter we had only private enterprises. For instance, now when you have a semiconductor policy, you don't give it to the PSUs. You are inviting private sector.
Comes to the open market. Yes.
So that is a contribution that Dr. Manmohan Singh, we owe to Dr. Manmohan Singh. Well, we have a market to trade and we have people to help us with those trading ideas. Let's get to the technical trades. Sudeep Shah and Shrikant Chauhan are joining us now. Good morning, Sudeep, Shrikant. Thank you very much for joining us and getting us back to business. Shrikant, what's the trade today on the Nifty and the stocks?
Good morning, Tata. Good morning, everyone. For Nifty, it is in the range. It has been consolidating since last 3 days within a narrow range of 200 points. And on the dismissal of that particular range only, we could see further more activity in this market. But I think the market has spent a lot of time and now it is on the verge of crossing this range. So on the dismissal of 23,600, we could see the levels of 23,200, which was its previous lowest level. But on the other side, if it breaks on the upward side, then we may even see the levels of 24,000 or 24,150. But while looking at the global macros, which are completely unfavorable and currency at 85.30, we need to be a little bit careful while adding long positions at higher levels. So we need to be more and more stock specific, and we need to focus on those companies which are really good and available at their important support levels. So in case if there is any specific activity in the market, then we should look for adding some pharma stocks. In that, we like Cipla, which is around 1490. We should look for adding Cipla at current levels with a stop loss at 1465. On the higher side, we can see the levels of maybe 1550, 1565. And the other stock which we like is Cummins India, which is trading at 3350, 3365. From here, the stock can move towards the levels of 3450, 3500. And here, for trading positions, we need to keep a stop loss somewhere close to 3,300.
Okay, all right. Got that, Shrikant. Let's also move on and take the calls from Sudeep. Sudeep, how do you find the trading setup and what's the advice? Any index trades at all?
First of all, good morning. See, what we are seeing in the Nifty is post that big fall on last Friday, around 400-500 point fall on Nifty, where Nifty retested 23,550 levels. Post that the next 3 sessions have been quite on a silent note. 23,850, 23,900 is proving a resistance here. So we feel that only if Nifty crosses 23,900, then a buy can be initiated for 24,150, 24,200. And one more important point post yesterday's rollover data is that the long short ratio stays at 18-19% now. This is quite a oversold zone if we see the long short ratio and the history of the data. So we should not extrapolate even on the short side and just take it being nimble-footed the next few days. Only if 23,600 breaks, then the downside could open up. Else, there could be a range trade between 23,600 and 23,900, and a lot of stock-specific activity. Now, talking about stock-specific activity, there are a couple of stocks on our radar. The first one being Indigo. Last few days, we have seen a lot of mid-caps and a lot of large caps being battered, and there are a lot of selling pressure happening all around. But here, this stock has broken out of its 12 to 15-day consolidation, and we have seen strong action on the daily as well as the weekly charts. So this can be bought with a stop loss of 46.50 on the downside, and the first targets on the upside could be closer to 48.80, 49.20. The second stock which we have is Apollo Tyres. Here also, last 5 sessions, we have seen a higher top, higher bottom formation. the overall structure on the weekly as well as the monthly chart is not yet disturbed. It is trading very close to its all-time highs, even in such a market. So we feel that this could be bought with a stop loss of 528, and the upside targets could be closer to 565 and 575 levels.
Okay. Thanks a lot for that, Sudeep, Shrikant. We have to go to a break. We'll come back to you guys. For the moment, a break, and then we are back with the pre-opening rates. Welcome back. We're almost hitting 9 a.m. and this is Open Exchange coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, the opening rates are flashing red, but I'm sure these are all wonky rates, 1% down, nothing like that. We'll come to it in a bit. We are at the moment, of course, listening to people who have worked with Dr. Manmohan Singh and sharing their memories and what they think are his legacies. Joining us now is Dr. Arvind Panagaria, the chairman of the 16th Finance Commission, and of course, a renowned trade economist. Dr. Panagaria, thank you very much indeed for taking our call and agreeing to speak. What would you say, sir, is the big legacy that Dr. Manmohan Singh leaves behind?
Well, for an economist, really, his legacy is what he did as the finance minister of India. Then he carried on that work forward also as the prime minister. But really, the big stuff came when he was a finance minister. That was the kind of breaking point where he also, transitioned from being a bureaucrat to becoming a politician. The 1991 reforms were clearly very, very critical. And I know actually from a conversation with him very directly, one-on-one, when I went to see him, just before I demitted my office at the Niti Aayog in 2017. And he told me the full story of how the devaluation, the double devaluation was done. And that was purely between him and Prime Minister Narasimha Rao. Nobody else knew about it when he went to him and said this was required. Everybody else was advising the Prime Minister against devaluation because of, the memories of 1966. I mean, that they had been so deeply kind of entrenched in etched in the minds of the people that they didn't want another devaluation. Even Prime Minister was not very favorable to it, but Dr. Manmohan Singh persuaded him, he prevailed. Prime Minister actually wanted to take it to the cabinet, and Dr. Manmohan Singh said, meaning, Prime Minister Rao wanted to take it to the cabinet before making the announcement of the devaluation, and Dr. Manmohan Singh dissuaded him. He said that, if you would take it to the cabinet, then the devaluation shall not happen, because Dr. Manmohan Singh rightly knew that, the cabinet would never go along with it. So, that was something of both the hallmark of a great economist and of a great diplomat. I think he read the tea leaves correctly. And finally, the devaluation happened, the first one. And the second one, we all know that story is very public, that Prime Minister Rao asked him to call off, but it was too late by then. The announcement had been made by the RBI.
Yeah, I remember that, sir. Dr. Rangarajan was with us for the 30th anniversary of the 1991 reforms in 2021. And he narrated this story that the first devaluation had gone through, but the second day, it happened in two stages, as you know, July 1st and 4th, if I'm not mistaken. And on the 4th, Dr. Singh called him and said, I think he always called him Professor. Professor, can you hold on? He said, no, sir, it is done. So the second devaluation, apparently, there was a call from Dr. Singh. But anyway, they were hand in glove and they created the FX market, as it were, created the government securities market because the ad hoc treasury stopped. Any other personal memories or qualities that you want to leave us with, Dr. Panagaria?
Well, he was a very simple person. I think, this is well known about him. Everybody says that, and I can speak to that as well. I visited him twice when I was at Niti Aayog. at his house. He was not in the greatest health, particularly at the 2017 visit. He said that, I have diabetes and I get tired. But nevertheless, he was known for not talking. But actually, when we sat one-on-one, he did a lot of talking in spite of his physical limitations because of diabetes. And came to see me out. Very, very humble, obviously, always. So I also met him at conferences at the India Policy Forum we used to organize. He also came to a launch of the book by Rakesh Mohan on 1991 reforms. There we also had a long chat. And he always, even if you knew that he was so humble in his demeanor, it always impressed you that, how
So that's a very nice angle you're telling us, that he was actually quite talkative in a conversation, but was quiet, of course.
Yes,
That's a very nice aspect of him that we did not know of. Did you meet him during the Lehman crisis, and was there any takeaway in terms of how to tackle it? I mean, as an economist, perhaps he could even have seen some trouble coming, even if not the magnitude of the trouble. Any thoughts on that, or during those troubled years from 2008 to 2013?
Right. So no, unfortunately, that is not the time. Certainly not the Lehman crisis time. I was in the US at the time, but I do remember, coming while he was prime minister twice. We met. This was, I think, both occasions. It was for the India Policy Forum, and each time I remember talking to him about the labor law reform. One time I also went to his office when he was the prime minister, and I made a big pitch to him about higher education reform. And he then spoke that, we have the Knowledge Commission looking into this, and hopefully they will give us a report, and we'll see where we go with it. Those are my conversations, really, but not during the Lehman crisis.
Okay, sir, thank you very much for sharing your personal moments with him and telling us things about which we would have never known. His interpersonal relations and how he came out as as a person in those relationships. Thank you very much, Dr. Panagaria, for joining us. We do hope we can have a more meaty conversation with you on the Finance Commission report as and when it is presented. Thank you for joining us, sir.
Thank you, Lata.
Okay, all right. And with that, we have to move to some really big breaking news that's coming through. Ultratech has bought almost 8.7% stake in Star Cement. I mean, the cement sector has been the story of 2024 in terms of just the sheer amount of consolidation that we've seen and the aggression by both the groups. I mean, Ultratech on one side, and then there is the Adani Group on the other side. The press release says that it's a non-controlling minority stake. We have Nimesh joining in. Nimesh, just when you think the year is going out and there's not much news in the market, well, here we are.
Big news.
Well, big news, Surbino. And as you rightly pointed out, further consolidation in the cement space. There is a breaking news which you are flashing. Ultratech Cement is buying 8.7% in Star Cement, spending close to 850 crores. My sense is they will buy close to 14%. The indication was in today's block, they will buy 14%. They've already done 8.7%. So watch out if there are further blocks once the market opens and they buy. So there is a confirmation that Ultratech Cement has bought a minority stake in Star Cement. The question is, will they go ahead and eventually do an open offer the way they did in India Cement as well? Only recently they got an approval for the open offer in India Cement as well. So at one side you have Ultratech aggressively going to the south market. They bought India Cement, and now they've bought a minority stake in Star Cement as well. So a big news from an Ultratech Cement point of view. They're further consolidating the cement industry. My sense is, while Star Cement will be in focus, watch out for the smaller cement players in today's market. We saw a bit of hint in yesterday's market as well. Some of the smaller stocks were buzzing in yesterday's market as well. That can that can be visible in today's market as well. But as things stand, the first indication is that they bought 8.7. The feedback to me is that they'll probably buy close to 14%, and then eventually there could be an open offer as well in Star Cement. So as I said, further consolidation, but I guess watch out for the other small cement players as well in today's market.
Okay, you're absolutely right, Nimesh. It's a holiday-themed trading week. We thought so many of our colleagues on leave. But thank you very much, Nimesh, for being there for us, even in a holiday session, and giving us some perspective. I guess we will start getting analysts to tell us about the implications of this merger. What is the size? What is the extent of, what happens to the size of the cement capacity of UltraTech as and when it becomes a bigger takeover. At the moment, it's only about 8.5%. But in the fullness of time, if more is purchased, as Nimesh says, and then it comes to be that an open offer is also made, then we are looking at much bigger numbers. We will be, of course, playing out the share prices of the other cement companies as well. I just wanted to pause for a minute from all this and take a look at the rupee. 85.30 is long gone, and now it is at 85.33. So clearly the Reserve Bank is having a hands-off approach at this point in time, or at least not really trying to defend a level, but just guiding or slowing down the inevitable depreciation of the rupee. I think that 108, that was the number which came out in the Reserve Bank bulletin last week, which indicated that through November, the rupee was overvalued by 8%. I think they're bringing it down, to the usual number. It's usually about 3-4% overvalued at the most, what we call 104 on the real effective exchange rate. In November, it went to 108.5 on the real effective exchange rate, which indicated that the rupee was overvalued. We are seeing now a gentle depreciation of the currency, which is almost being shepherded by the Reserve Bank. We do see them, but only after the first 7-8 pice of depreciation. So keep an eye on the rupee as well. And we'll wait for, of course, the stock markets to open. Another set of stocks that you should watch would be banks. Abhishek is here first to tell us why we should be watching IndusInd. Abhishek.
Well, IndusInd has put out a news wherein they intend to sell their microfinance loans worth about 1,573 crore, over there. So this reserve price has been put at 85 crore for this 1,573 crore, which is about 5.4% of this total stress pool that they intend to sell. The gross NPA in the MFI portfolio was about close to 2,260 crores. So this looks like about 69.6% of the stress pool wherein they have already made the provisions they intend to sell. We know that microfinance sector has been under stress for the last 2 quarters in a row. Calculation shows that the average ticket size would be about 14,820 per loan. So this is in line with the industry trend. Back to you.
Okay, all right. Abhishek, thank you very much for that. So I was just looking at some of the cement stocks as well in the pre-open. Star obviously is higher. And as Nimesh is saying, it's going to be a lot about now wondering what's the next move. And right now, there's no official statement on the intent, whether there will be a further stake purchase, whether it's going to be a full-blown, open offer or not. Just to check ACC and Ambuja, just to check what the other camp is doing at this point in time. Flat trends on those two from the Adani stable. Remember, it was just yesterday that UltraTech finally completed the acquisition of India Cements, where the approvals from the Competition Commission of India came in. So they are, announcing to the market that they are not letting go on the aggression and the plans ahead as well. More on cement in just a bit, but let's also look at Dixon Technologies, which announced another tie-up, and this time for, I think, refrigerators and refrigerator components. Upasna.
Dixon remains in focus today as Dixon Electro Manufacturing Private Limited, which is company's wholly owned subsidiary, has entered into a MOU with Cellcore Gadgets. Now, this MOU is mainly for manufacturing of refrigerators and other related components of Cellcore, and company has said that by this partnership, Dixon aims to increase its customer base in the refrigerator segment. Now, mind you that the Cellcore is a leading name in the consumer electronic industry, and it has a commitment towards affordability in terms of pricing of its products, and it is spread across diverse range of products such as home appliances, smart TVs, mobile phones, kitchen appliances and various others. Now we'll have to closely watch out for what this MOU spells out for the company in terms of its key rationale and also what it means in terms of its refrigerator segment manufacturing. So that's the reason Dixon will remain in focus today.
Okay. Thank you very much for that, Upasna. Actually, Dixon is always on the radar, isn't it? Yesterday we saw, we have been seeing a big rally in Cairns as well. So the entire EMS space is keeping us on our toes. And now with this announcement, I guess there will be fresh reasons for Dixon to be up and about in the market as well, the Dixon share, that is. At the moment, it looks like the indexes are going to open in the green, which will be, of course, a breath of fresh air. We will have to see whether it can maintain that. The rupee depreciation actually can be a positive, because at some point when it depreciates enough, the foreign investor finds it attractive, because you also get more bang for the buck, and the fear of further depreciation declines because it is now properly valued. A fairly valued currency is always better than an overvalued currency for an investor coming in. So it's quite possible that at some point after the depreciation, it is not negative news, but actually positive news for the markets. Well, there goes the bell, and the market has started in a brilliant shade of green, actually. 1/3% higher, 23,800 has been taken, and of course, 78,750 on the sensex. The bank nifty starts all guns blazing, again, 0.5% higher. Almost 0.4 actually, to be precise. That's 51,400 almost on the Nifty. Bank and the mid caps also are starting shoulder to shoulder with the big stocks. What have we in terms of gainers in the big stocks? It's all the big boys actually. Tata Motors, Wipro, Bajaj Auto, Tech Mahindra. So tech stocks are all doing well. Along with it, also banks like ICICI Bank, IndusInd Bank. Okay, IndusInd Bank's sale of bad loans is actually seen as a positive. It just, I guess, making a clean break is always better than keeping the wound festering. So that one's got a thumbs up from the market. Bajaj Finance, Grasim, Nestle, Kotak Mahindra Bank, all of them up between 0.3 and 1%. The biggest gain actually is Bajaj Auto with a 1.2% gain. Not doing too well, Apollo Hospitals, ONGC, Titan, BEL, Britannia. All those are down about 0.2%. So really not much of a downtick. And not much of an uptick either. The stock that's really the highest gainer is just about 2% higher. And then you have, of course, the IndusInd Banks and the Tata Motors and the ICICI Banks, which are all up about 1%. Now the bank nifty has raised to 0.5% gain.
Okay. Well, it's a shade of green in the mid-cap market as well. And the star of the action is Star Cement. What else? 7% up on this stake purchase, 8.7% by Ultratech, and the market wondering what's coming next. Aside of that, some more newsmakers. Mafatlal Industries, 5.5% up. Gensol Engineering, which announced a renewable order from NTPC, large order, 6% up over there. Dixon, which is looking at the tie-up on the refrigeration side, 2.5% up. Power Mech, up about 2.7% as well. Jubilant is in a tie-up with Coke for the marketing and sale of some of the beverages. Stocks up about 0.7% as well. So that's the newsmakers tally. Beyond news, let's see what else is moving in the market. By the way, Bajaj Auto suddenly crept up on my screen. Big move on the Nifty in Bajaj Auto itself, looking quite good. Aside of that, some of the recent listings, like this International Gemological Institute, no stopping this stock, another 2% up this morning. Back to the Nifty, where the gains are fairly steady, about 70 points higher. Tata Motors and Bajaj Auto continue the good form from yesterday. So autos was a theme that continued yesterday. It's up again today. And ICICI Bank, NTPC, Tech Mahindra, these are some of the other key gainers as of now. Not much problem actually. Just a few consumer and healthcare stocks like Apollo, Dr. Reddy's, Britannia. These are slightly lower. Titan is slightly lower. But otherwise, the market has started off with a flourish. We're approaching the 200-day moving average once again. Let's see if the bulls can prevail this time, because usually we've got this opening gap which has been sold into. Let's see if today ends up being different or not. But as of now, it's a nice green start and the screen is looking positive. Well, with that, let's move on to our next guest. We have Nilesh.
Nilesh has just joined us.
Nilesh is just going to join us in a bit. But that's not bad. I think the question is whether this lasts. The whole problem is that the market completely fizzles out because we get this FPI selling through the course of the day. Now, let's see, whether...
It's just possible that because it's a Friday, people may not want to go home with too many short positions. That could be one reason. And, like I said, when shares and the rupee fall enough, at that point in time, the FPI selling also ends. Because, either there's no point or you're expecting that, you better wait for better levels to sell. So it's quite possible that the combo of fall is leading to a trigger point of end of sales and beginning of purchases. I mean, let's hope that my interpretation is correct. But let's defer to the expert, and he's joining us now. Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company, is with us. Nilesh, I'm itching to ask you about the markets. But first, I'm sure you have memories. You perhaps were not in the market in 1991. You don't look that old. But memories, what did he mean from a capital market perspective, Dr. Manmohan Singh?
See, for all the people of our generation, he was the person who gave wings to our dreams. Yes. Prior to our generation, opportunity was study in India, go abroad for opportunity. But when the economic liberalization was launched, we were passing through phases where we had to pledge gold to raise foreign exchange loan. And the whole market and economy was looking up. I'm glad that I became part of a tribe which stayed back in India. And thanks to the liberalization and reforms launched by Dr. Manmohan Singh, all of us have enjoyed today's India. So our generation owe eternal debt to Dr. Manmohan Singh.
No, I take your point. I think it was Chidambaram who tweeted saying that he created the middle class as we now know it. And I think that's what Nilesh is referring to. Okay, Nilesh, we have been getting tributes through the day, but now we have a market to trade. So we want to ask you, you heard that deal in the cement space? Ultratech just buying 8.7% in Star Cement. What is the sense? I mean, cement was not the most favored sector, obviously one of the downbeat sectors of 2024. You think it's time to give it a look for reasons other than just building homes?
Undoubtedly, it is one of the cheapest commodity in India, and it can't be imported. And apart from homes, there is also infrastructure need for cement. There is a consolidation happening which will bring economies of scale, which will improve efficiency, and which will also bring some amount of price stabilization. We believe cement sector is a probably better sector to play building material space, especially at current valuation.
Okay. Nilesh, hi, good morning. Great to have you on the show today. And what a year it's been, right? So much of news flow and so much of action in the market. But I think the hallmark for me has been the fact, since I track personal finance as well, has been that number. You know, I was compiling figures for the end of the year. And this year, the equity category is the one where investors have piled up the maximum amount of money in mutual funds. I think about 3.5 lakh crores. This is as of November data, so maybe December figures would look even better. But Nilesh, that's the biggest question. We can look at all the cues of what will happen to tariffs and, you know, what happens to the exchange rate and what happens to interest rates. All of that is fine at a macro level. At the end of the day, it boils down to how much is money is coming in and how much is going out in the market, right? And that's where the resilience of the domestic retail investor has been the biggest story of 2024. Do you see that continuing in 2025, even if the market remains range-bound, sideways, or maybe corrects more?
So undoubtedly, yes. Partly, it is all credit to the mutual fund distributors who have gone and explained financial planning to investors. Partly, it is due to friends in media like you, Surbi and Lata, who have always explained about long-term investing to investors. And on a bad day when markets are crashing, you have given confidence to investors that they need to remain invested for long-term. Part credit also goes to regulator like SEBI, which has created boundaries within which mutual fund industry is operating and which gives them trust and confidence of investors. Part credit should go to manufacturers like us who have toiled for decades to build that trust and confidence. And now we are getting wind in our sail as our happy customers give us word of mouth publicity. And at the end of the day, what money we have received between FY21 and FY23, mutual funds got less money than what people invested in currency note, which is a depreciating asset. Come to 2024, what we have got is less than 10% of financial savings of investors. Forget the total savings. So there is a long journey ahead. Decades back, we used to say one day there will be retail tsunami. Now we are saying that this is just the beginning. This is just the trailer. पिक्चर अभी बाकी है मेरे दोस्त.
No, absolutely, Nilesh. No taking away from the long-term structural change that has that's kind of been unleashed on the market, the financialization of savings and the realization that you can make long-term wealth by being in the equity market. But I'm asking from a near-term perspective, because you've seen so many cycles, as the patience of the investor gets tested over the next few months, if the market remains volatile or sideways, do you see flows remaining as strong? I mean, for instance, December, what are the trends that you are seeing?
See, December is generally a slower month because of holiday season and vacation. And despite that, flows have remained strong. I think the responsibility is on us, the mutual funds, the distributor community, and the media to keep investors informed that they will have to moderate return expectation. In the past, we used to get punished if we delivered negative return. This time, my worry is not negative return, it is below expectation return. Last 5 years have spoiled habits of investors. Everyone is looking at 25-30% return per annum compounded. The actual returns will be far, far lower than that. So as long as we can do the expectation management of investors, I think flows will continue. Will there be some exceptions to the rule? Undoubtedly, yes. We are not a homogeneous market, but majority of Indian investors have become matured enough, but we have a role to play in managing their expectations.
Okay, well, let me get to some brass tacks. Nilesh, the sector of 2024 actually has been pharma, quite unexpectedly. And of course, the EMS, the e-commerce sectors have also done very well. Would you see these themes running through 2025 as well, or will they be new themes?
From a business point of view, Lata, they will continue to do well. In the new age platform, winner takes it all. The number one player's margin will be 50-60%. Number two will be 30-40%, and number three will be loss-making. So anyone who is becoming a winner in new age digital platform business, they will continue to do well. In terms of EMS business point of view, undoubtedly they will continue to do well. China plus one is happening. Our companies are entering into joint ventures. They are getting now components. It's evolving an ecosystem just like what Maruti Suzuki did with automobile and auto component. So business point of view, there's no doubt in my mind that in pharma, in EMS, and in new age, business will continue to grow. The real question comes from a valuation point of view. Are we discounting too many things? And I believe there will be cycle in some of these companies, not all the companies, but some of these companies in these sectors, market is expecting too many things, and there might be some disappointment. The disappointment could be one quarter's earning getting deferred over 2-3 quarters, that's it. So long-term investors will still continue to hold these stocks. There will be obviously some trading opportunity based on how this company is delivered versus expectations.
So as a follow-up, Nilesh, let me ask you this. For 2025, do you see the same themes continuing to run up, maybe with some corrections here and there and some patchy returns along the way, which would be, say, sectors like EMS, manufacturing, PSU, CapEx? Do you see the same horses running? Or will this be a year of churn where you go back to, say, banks that have underperformed, go back to consumer stocks that no one wants to buy right now, or maybe cement? I mean, we discussed that at the start itself. So is it going to be a year of churn and sector rotation, or will it continue to be the leaders of 24 that shine in 25 as well?
So at least we are positioning at Kotak Mutual Fund for churn. Okay. We have moved from expensive valuation to reasonable valuation. And maybe this is like khatte angur, but we will stick our neck that valuation becomes the driver for your future return. We believe in banking sector, those banks where credit culture is good and who don't have overexposure to microfinance, personal loan, and unsecured lending should start outperforming the market over a period of time. In consumer staple, companies which have exposure to rural India should start outperforming as bumper Kharif and Rabi crop starts putting an impact into the rural consumer's pocket. We also believe pharma and IT kind of sectors will continue to do well as valuations are reasonable. On industrial side, we are very, very selective. and we are booking profit in many of our counters. CapEx, defense, these are themes, but their market is expecting too many things, and there may be a year of consolidation ahead. And mind you, this is all going to come in a phase where returns are going to significantly narrow between large, mid, and small, as well as compared to what last 5 years have delivered. So sector rotation, stock rotation will become key as we are all fighting to get that low double-digit, high single-digit returns.
Okay, point taken.
All right, Nilesh, thank you very much. It's been an absolute pleasure listening to you, not just today, through the year. And we wish you a fantastic end to 2024 and even more brighter and buoyant 2025. Thank you so much for all the conversations. And, we wish you all the very best to you and your team at Kotak Mutual Fund for the new year.
Thank you, Supreet.
Okay, all right. And with that, let's move on to our first corporate conversation on the show. And we're talking about the stars of 2024, some of the stocks in the sectors that have done really well. And one such space, obviously, is real estate. The cycle continues to be in an upswing. So what does the new year have in store? We have Mr. Ashok Tyagi joining in, Managing Director of DLF. Mr. Tyagi, thank you for being with us in Seasons. Greetings to you, sir. So the year was spent in recounting how many new launches you had and how they got sold in 2 days or 3 days or, maybe a couple of hours. And these were some very, very, high-priced, high-end luxury launches. That was the story of 24. Let me start with a broader view as we get into 25. How many years are we in the real estate upcycle already? Do you see the kind of buoyancy and appetite for high-end luxury housing continuing in 25 as well?
So good morning, Surabhi. Honestly, I am not a fortune teller, and, I think your question is unfair because when we were in a 7 or 8 years down cycle, nobody asked how long would the down cycle continue. So I think we are enjoying the ride. I think the entire industry, at least the organized industry, is enjoying the ride. I mean, I know it's been about 3 years since the current upcycle sort of, strengthened, and it's kept on strengthening year on year. In all fairness, if you look at it in a slightly more, I'd say, scientific manner, and I'm not an economist, I think most of the macros continue to point to this sustained growth on the real estate cycle, at least on the premium and the luxury segments. We don't deal in affordable, in all fairness, unfortunately, everything is affordable, but we don't deal in the lower end of the housing market. And I'm assuming that there is some degree of stress that's come in there for the last 4 quarters or so. But the premium and luxury segments continue to strengthen, not only in NCR, but in Mumbai and all of the urban locations that we operate in or we observe.
No, Mr. Tyagi, I wasn't asking you to wear an economist's hat at all. I was simply asking you that, I think one of the first signs that we see when there is, and it's a cycle, it happens every time, that there might be, some exuberance building in is when it's not end user demand entirely. A lot of it starts becoming investor demand. How much of that have you seen already? Let's talk about the last quarter itself. How much would you say is end user? How much is an element of investor/NRI demand coming through?
Okay. So, I mean, we've made it public that our NRI demand is in the range of 25%, 27% for all new launches. Almost a quarter of our sales are to the NRI segment. And this is spread across from Singapore to Dubai, London, US. Now, as far as your issue is concerned of investor versus end user, honestly, anybody who's buying a 8 or a 10 crore house most probably already has a dwelling unit which he owns, and whether he'll move in here or not, I think that obviously only post-completion that choice will be made. What we have done is that we have done basic controls. We have hiked up our initial deposit, which we take in the matter when we have somebody book a house for us, to 50 lakh rupees against the normal of 10 or 15 lakh rupees to ensure that the froth gets filtered out. In fact, for Dahlias, the booking amount is 2.5 crore rupees. So I think clearly we have tried to ensure that only serious players are coming in. Okay. The stuff that we have sold in the last 2.5 years, we have so far seen only a very small, I'd say, request for retrades or buybacks, which means that the investors or the people who have bought it are clearly holding on to their purchases. But again, post-completion, I'm sure many of them will shift into these houses from their existing houses because of just the better quality of life. But I think that's something which will have to be observed. What we are not seeing, just for the record, is those early 2010s frothy times when people used to buy and trade in 6 months.
And flip.
Point taken. Mr. Tyagi, good morning, and thank you very
Good
much
morning,
indeed
ma'am.
for joining us. Pleasure having you with us. Wanted to understand, your percentage of luxury homes has gone up. I think it's gone up for the industry itself, but yours has gone up from, say, 3% in 2021 to 6% in 22 to 9% in 23. Will that be the trend going forward as well? More in luxury, and does that mean higher margins as well for the company?
Yes. So Lata, honestly, I don't necessarily recognize those percentages that you mentioned, but clearly our focus is, at least in Gurgaon, the properties that we are selling are mostly in the 7 crore plus range. So Privana is about 7 odd crores. Dahlias obviously is in a different price segment since it's super luxury. Our properties in the Chandigarh ecosystem in the Tri-City are in the range of between 2.5 to 3.5 to 4 crores. Once we come in Mumbai, I think by Mumbai standard, it will be a relatively premium housing and not luxury, because I think the price point should be in the 5 to 8 crore category. So I think that's the price points we are operating in. So I mean, if you take luxury as, say, 5 crores plus, I think most of our sales are in the luxury segment.
Okay. So if I can persist a bit, what do you think you will do in terms of acquiring land bank, in terms of development of the land, in terms of revenue, in terms of margin? Just a ballpark, if you can tell us how the coming year will look.
Of course. So, ma'am, if you see, in fact, what we've also stated in our analyst reports, that our target is to eventually hit a gross margin of in the range of 45 to 50%. We are currently hovering at the 37 to 40% mark. And as more and more luxury product offerings come to the market, I think we should start hitting our target margins. From a launch standpoint, I think clearly we are continue to look at focusing in Gurgaon, including the Dahlias, which will continue to sell through the year. There'll be new phases of Privana and maybe one more project in Gurgaon. We will have the project in Mumbai. Possibly the launch in Goa should also happen sometime during the calendar 25. So I think really we continue to focus on this segment, Lata.
Okay. And if you can give us some numbers, what are you concentrating? I mean, what are you giving yourselves as targets?
Okay,
for margins,
so,
revenues?
Yeah, so the pre-sales guidance that we had guided for the fiscal 25 was, I think, about 16 to 17,000 crores, which hopefully we've done about 7,000 crores in the first half. I mean, obviously, since our results are out 3 weeks from now, I would not comment on specific numbers, Lata. But I think we look very comfortable to meeting.
Not for tomorrow. I meant
no, for the fiscal 24-25. I'm saying, so we are saying for the fiscal 24-25, we had given a guidance of 16 to 17,000 crores, and I think we look comfortably placed to meet and hopefully slightly exceed that. I mean, obviously, the guidance for the next year should be a clip up on this, but I think the specific number we'll typically announce after the end of Q4, and I think we'll just stick to that piece. Our margins on new sales continue to be in the 40% plus range, and as Dahlias enters, I think this should start inching towards the late 40s mark.
So do you see climate becoming a kind of a wet blanket? I mean, visibility even in a city like Bombay, where you have a sea breeze, has dropped to zilch. And a lot of that is, at least the finger pointing, is towards the very high construction level in the city. I mean, worker participation also will fall, right, in a city like Delhi as well. Do you see that becoming a reason why you will not be able to have higher and higher construction, execution and sales targets?
So there are 2 points to this, Lata. One, clearly, I think now if you look at the last 3 to 4 years at least, because of the NGT ban that comes in the winter months on account of the high pollution and the air quality, I mean, I'd say that we are effectively constructing between 10.5 to 11 months in a year against 12. That I think is a given, in that sense. And I think in all of our construction estimates, most responsible players are factoring in. So I mean, a shutdown, a loss of 15 to 30 days in this November-December time frame is unfortunate, but I think that's just the price that you have to pay for unfortunately the air quality that is there. What you raise a slightly deeper question also on execution. And I think the execution bandwidth of the contracting ecosystem continues to be a matter of concern, especially as the overall execution throughput on both the infrastructure and real estate continues to grow. And I think that's where something, frankly, I think most players would be concerned about as to, yes, the market can possibly absorb more, but can we responsibly execute more?
Okay. Finally, sir, leave us with a sort of a trend on pricing as well. How has it been in the third quarter, and what do you expect again in the coming months in 2025?
So I think, clearly, I'd say if you look at the 21 to 24 time frame, at least the NCR real estate was coming off a long lull. So I think there was like a rebound pricing that took place. I think the price growth will continue. Maybe the pace of growth will begin slightly moderating, in all fairness, but I don't see that because I also track the secondary sales, which is a far more secular sort of a thing, metric. And there also in the secondary sale, the markets continue to strengthen, the prices continue to strengthen. But maybe at some stage, the price growth will begin moderating slightly. But I don't think that's a concern a cause for immediate concern. Also in the super luxury segment, I think it's also a question because the clientele buying that is not necessarily that much concerned about price, but about facilities, location, the address. So I think there the dynamics actually are different than what they are for the bulk of the market.
Absolutely. So pricing continues to be firm as of now, and the outlook looks promising. Thank you very much for joining in, Mr. Tyagi. Wish you a very happy New Year to you and to your entire team at DLF. Thanks for being with us, and hope you have a fantastic New Year's holiday as well.
Thank you, ma'am, and very happy New Year to you as well. Thank you.
Thank you,
Thank
sir.
you, Mr. Tyagi.
We'll take a break on that note, come back on the other side, and then we focus on yet another star of 2024, Dixon Technologies. What wealth creation by the EMS space? So what lies ahead? We'll get chatting with Saurabh Gupta. They've also announced, of course, another manufacturing tie-up today. More on that in just a bit.
Welcome back to Corporate Radar. We've been discussing the stars of 2024, and the obvious star would be Dixon Technologies is one of the top stock market gainers in the year that's just ending. The stock has surged more than 180% in the year so far. The company's arm, Dixon Electro Manufacturing, has entered into an MOU with Celecor Gadgets. I assume that's the pronunciation. And they will be manufacturing refrigerators and related components. We have Saurabh Gupta, Chief Financial Officer at Dixon Technologies, joining us. Mr. Gupta, good morning, and thank you very much indeed for joining us. Can you take us, of course, many congratulations for a brilliant year in 2024. But for the news at hand, can you take us through the details of this MOU you have with Celecor Gadgets? What are the key synergies? What is the rationale? And how much will your customer base increase in refrigerators?
Yeah, so Lata, the Celecor Gadgets, we have tied up both in the semi-automatic washing machines and also in the refrigerators category. As you know, we are the leaders in both the categories in India. Refrigerators, we have a capacity of almost 1.2 million out of the total market of 10 million direct cool category. And we are further expanding it to 1.6 million. So this is another customer addition apart from the customers that we already have. And yeah, we are looking to targeting of crossing almost 1 million plus in next year in this refrigerator as a business. And semi-automatic as a category, we already have all the large players on board. And we already have a 30-35% market share in that category. So this adds another more volumes to both in refrigerator and semi-automatic washing machines.
Yeah. Saurabh, hi. It's really been a great year, right? And you've announced so many tie-ups. There's a Vivo tie-up as well, and now this one on the refrigeration side. You know, when we caught up with Mr. Lal, I think it was a couple of weeks back, maybe a month or two back, just after the second quarter, he did tell us that the FY25 revenue, because of all these additional tie-ups, that it could be much higher than the original guidance of 32,000 crores. Where do you think you will be now? Because, you know, we've just got one quarter left in the year.
Yeah, so Surbi, we are definitely will be surpassing those numbers. And as I mentioned to you last time, that our H2 performance, which is between Q3 and Q4, would be significantly better than the first half. So definitely, it should be much higher than the 32,000 crore that you just mentioned.
Okay. Also, just give us, I mean, if you can give us at least a range. I won't push you because I know that, we'll be getting the Q3 numbers soon. But if you could give us some sense of a range in terms of the CAGR growth and a breakup of the pie as some of the newer businesses also kick in. So there's mobiles, and then there is, of course, computer peripherals and, laptops and all of the new tie-ups there. And then, areas like washing machine, areas like refrigeration, the type that you just announced. So what will the revenue pie look like, by the end of FY26, and some estimation of a revenue CAGR that your investors can expect?
Yeah, so the largest opportunity is, of course, mobiles. So almost 65 to 70% should be contributed by mobiles. And I would say after mobiles, IT hardware and telecom as a category looks very promising. We have a very strong order book in both the categories. And then the other categories of washing machines, TVs would also see a growth. Some would have a single-digit growth, some would have a double-digit growth kind of a structure. But a large part of the growth will be in mobiles, because that's where we have one, the addressable opportunity is huge there. And secondly, we have got a lot of customers acquisitions in this category. So pretty much all the customers which are there on the Android platform are our customers today. And Vivo is also one more step in that direction. And similarly, IT hardware for us, we have been able to acquire some large marquee brands, and we should start production for them by Q1 of next financial year. So it will be mobiles led by IT hardware.
On mobiles, just a follow-up there on mobiles, because there are a lot of marquee announcements that happened, right? The Google Pixel tie-up, and then Vivo, the Vivo one as well. So, I mean, when you work across multiple OEMs, are margins very much similar, or is there some scope for extracting better margins as well for your larger segment, which is mobiles?
Yes, it will be margin profile would be almost similar. But what we are trying to do in mobiles, as I mentioned last time, that we are now trying to focus significantly on the backward integration piece. So whether it's the display, whether it's the mechanicals, die cuts, camera modules. So once we get into more backward integration, deepen the level of manufacturing, we will see a significant margin expansion. Also on higher volumes each year, I think so there'll be benefits of operating leverage that will also come in. So year on year, you will see the margin expansion happening in mobiles, which will have a very positive impact on the company level margins as well, because that would contribute almost 65 to 70% to my overall revenues.
Can you give us some estimation?
1 minute. So I have two questions for you, Mr. Gupta. One, what happens when does the PLI phase out, and what will be there at that time, the impact on margins? And secondly, give me a number for, to what extent your margins increase because of value addition.
Yeah, so Lata, see now the PLI is now being, government focus is more on the component side. So the mobile PLI will be phased out on 31st March 2026. The other PLIs of IT hardware, telecom, and two on the component side, we still have some time, 3-4 years left in those PLIs. The government focus is now more on the components, so they are planning to bring about a component PLI. And as I mentioned to you that despite the PLI going away, we feel confident that our margin expansion can be in the range of 100 to 120 basis points over the next 2 years, because all this backward integration work that we are doing, which we are targeting through our joint venture partners, these are highly margin accretive. Apart from margin accretive, that builds a lot of strength and moat in our business. And we think we'll be able to add to our margins. And we already have a large customer base, and that customer base for us is only increasing. So net of PLI, that will be margin accretive for us, I would say.
How much you aren't telling us, Mr. Gupta, because of the addition?
If you could just repeat the number, yeah.
Around 100 and 120 bips over a period of 24-26 months, yeah.
Okay. 100
much higher revenue base. Yeah.
Got that. About 1 percentage point or 1.2 percentage point is what that's substantial. Mr. Gupta, thank you very much indeed for joining us. And here's wishing that 25 and thereafter is as glorious for Dixon and everyone in your company, including yourself. Thank you very much for joining us.
Thank you so much, and wishing you the same as well to you and entire CNBC team. Thank you.
Okay. Well, that's Dixon. We now are joined by another company that's done well in 2024. despite several restrictions coming in from the Reserve Bank. Shriram Finance is the next management on the show. Joining us is Umesh Revankar, Executive Vice Chairman of Shriram Finance. Mr. Revankar, good morning and thank you very much for joining us. But for you, it's a tougher question. I don't know if you saw the Reserve Bank report on trend and progress in banking. They're pretty clear that they are going to have more restrictions or at least safeguards against unsecured loans. They have said that they will ask boards to put in some restrictions on unsecured loans. What's the sense? First of all, in your own case, what's the unsecured loan percentage now? And are you noticing more defaults in unsecured loans? And will you therefore start tapering them in the quarters to come?
Yeah, good morning. As far as the RBI's view is concerned, it has been very clear for nearly 1 year, I think more than 1 year, that we would like unsecured loan, especially the loans without of funds.
Mr. Revankar, we'll do one thing. We'll just have to redial because we are getting a few words and we are not getting a few words. So we will just redial that line and come back to you rather than, punish viewers. Just a word on the markets. Until then, it's quite clearly a big stocks day, which of course gives one a sense that perhaps it's an FPI, at least lack of selling, that we're seeing, and therefore short covering because usually the FPI selling takes place in the big stocks. So we have the sensex now racing up to a 0.6, sensex and nifty up 0.6. We were expecting that 23,900 will be hit yesterday, but it's almost there. 23,895 as we speak, highest point of the morning, and we are rushing to the 23,900 mark. So clearly a very good day for the markets, and the bank nifty is leading the show, slightly higher than the nifty itself at 0.65 up. Just to tell you the stocks that are doing well in the banking space, IndusInd Bank, of course, has been doing extremely well after it demonstrated cleaning up of its balance sheet and taking away the MFI portion, selling it to ARCs. We also have, of course, other NBFCs like Bajaj Finance doing very well. ICICI Bank is leading the pack as far as the banking stocks are concerned with a 1% gain. Kotak Mahindra and a few other banks, HDFC Bank, are in close second and third position. But all that is keeping the banks fairly hydrated, so they're not scared off by the warning coming from the Reserve Bank.
Yeah, and I think finally it seems that the FPIs have closed their books for the year after finishing the expiry yesterday and doing that final sale of over 2,000 crores in the cash market. Because it can explain the fact that this is after a long time that the large cap space has managed to build on the opening games. I mean, I don't remember using that language in the past so many trading days. So this is what we have right now. 23,900 is on the board as the Nifty is, probably going to hope to take aim at even 24,000. Who knows? Over the next 1 or 2 days. Some of the leaders beyond the Nifty include stocks like Escorts Kubota, Metro Brands, there's Zensar, which is up and about. But I think we have Mr. Revankar now back with us on the line. So let's go back to that question that Lata was raising. Mr. Revankar, season's greetings to you, sir. And, first up, we want to talk about all the strong business trends in just a bit. But first up, we want to understand if you sort of happen to go through the latest RBI, advisory and nudges with respect to the overall unsecured portfolio and the linkages between the private credit market and the NBFC and the banking system. Your thoughts?
Yeah, I see. Basically, I would like to say that the RBI stance has been here for more than a year now. So it is not new. And RBI has been cautious on the unsecured loan, especially loans which do not have application funds, in the sense you do not know the usage. So pure consumption loan or the funds which are taken for not a specific activity. That is what RBI has been cautioning. And NBFC sector as a whole, or even banking sector, have taken it into its strides. And everyone has tried to bring in more caution against that kind of thing. And focus on the application application-based funding or application-based loans. So I think pretty clear. There is nothing really change in RBI stance in the new advisory.
Mr. Revankar, I think we have to, reconnect. We are simply not able to get full sentences of what you are saying. So we will try and reconnect or perhaps connect on another day. It's not, the line is not favoring, we are not lucky in terms of technology today. We're not able to get through and listen to you. Maybe it's a good idea to take a break at this point in time. We have the markets in a very good position, but the mid caps are not doing too well. Today, quite clearly, is a big cap day, and maybe we want to focus attention on the cement pack as well. That's the pack, of course, which is doing very well, but led by the mid caps. NCL Industries actually is taking the cake with a 7.3% gain. Market probably trying to guess the next takeover target, maybe. Star Cement is still the second highest with a 4.3% gain. Sagar Cements, another 4.3%. So clearly, the other smaller stocks are looking very good. Grasim, again, shouldn't be counted as cement, but as a holding company, that's up 1%. Heidelberg Cement up 0.9%, Digvijay 0.9%. So cement stocks, practically all of them are in the green. But otherwise, it's a very, very green screen, even with respect to other stocks. We have good gains coming in. Tata Motors, IndusInd Bank, M&M, Trent, MMFSL. So it's a fairly big day as far as the big stocks are concerned. Now the Nifty raising well above the 23,900 mark.
Yes, absolutely. By the way, we will be getting the official listed rates for 5 companies today. And I was looking at some of them in the pre-listing session, where the prices start coming in. It looks like DAM Capital could start with almost a 40% pop. There's Transrail Lighting, 36% higher. Santanam Textiles. This is a pre-listing segment. At 10 o'clock, we'll get the official rates in as well in the next couple of seconds. So it's been a phenomenal year for the primary market as well. And some of these final stars in the primary arena look like they could be off to a positive start. Again, talking about, and the moves actually in the mid-cap market are getting fairly outsized as well. For instance, look at something like Akam Drugs. Suddenly the stock is surging, 7-8% on the higher side on Akam Drugs. Look at Phenolics Industries. You could look at something like Sensar. So big moves coming in, but obviously, you have to debate volumes because it is that part of the year. Phenolics Industries, not cables. Sensar is up, Phenolics Industries is higher. Akam is up almost 9 to 10% as well. Plenty of names which are bouncing around. On the volumes charts, where the volumes are actually, substantial enough, that's where a couple of PSUs are making their presence felt. That would be a Hoodco and Aircon. And then there are names like Lemon Tree Hotels, JK Tyre. So these are some of the names which are up and about, where there's positive price action and there's reasonable volume action as well. So that's what we have ongoing for now. But it's the large caps finally celebrating 170 points up and climbing towards the 24,000 mark. That's the Nifty for you.
Just to throw a bit of cold water, the rupee is going up at 85.40 now. I hope you don't have foreign travel plans on the anvil. But yeah, it is going to get a little expensive for dollar expenditure. But in the long run, we must always remember, why in the long run, even in the short run, a dollar appreciation or a rupee depreciation should not be seen as negative. It's a positive for the economy because imports become expensive. That protects domestic industry. You ask any exporter at Tirupur or any even importer in Ludhiana, where you have a lot of steel scrap importers, while the initial imports are expensive, domestic steel scrap becomes more viable, and therefore you have a lot of advantages for the domestic industry, especially the MSME industry, when the rupee depreciates and the dollar becomes expensive. So do not look at it only as a positive for exporters. It is a bigger positive for the domestic industry because of the protection they get. And now we have DAM Capital listing pictures coming in for you.
Imagine that, 5 listings on one day. That's our the vibrancy of our equity markets. There you go across.
2, 1. Congratulations.
Okay, Transrail. Let me quickly start getting to the prices as well and see what these stocks are actually doing. Transrail is up about 37%. Mamta Machinery is up 150%.
Oh my God.
Dam Capital is up 42%. Sanathan Textiles is up about 30%. So, you know, my God.
Mamata Machinery, look at the list.
150%. Yeah. It's quite something.
Okay.
And of course, Dam Capital is the one where RBL Bank has sold off, a chunk of the stake that it was previously holding as well. So that's something.
They're all listing at a premium to the issue price, but this Mamta is like 170% higher. Mamta Machinery. I can't remember whether we've had a listing as plumb as that. 160% higher than the issue price, or something like 400 rupees higher than the issue price. Transrail also very good at 35%. And Dam Capital 50%, nearly 48% premium to the listing price. So
there's also Concord Enviro. We didn't mention that. That's the fifth one into the waste management, water treatment space, which is obviously a sector which is a hot sector again. And it's up about 14-15%. That stock as well. So all five, Panch Ka Punch, opening out in positive territory. That's the listing rush of the morning.
Okay, not bad. Even Sanathan Textiles is up about 75%. It's only Concord, which perhaps at a 15% looks a little tame. Sanathan Textiles up 23%. Concord Enviro is up about 15.3% from the issue price. Mamata is still the one that's taking the cake at 160% higher in terms of listing. Transrail, I think, is middling with a 35% gain, but it's all between 15 and 160% in terms of gains. All of them in the green. I'm not surprised that the mid-cap index is not doing well, because I think all the investors are now concentrating on the primary market, on the IPO market, and not on the secondary market. So at the moment, it's not getting the attention. The attention is focused on the IPO market, which is doing extremely well. Well, we have to take a break on that note. We will have to apologize to the Shriram Finance Management. We are hoping we will be lucky on another day. Take a break and come back. We have a lot of very big guests joining us to pay their tributes to former Prime Minister Manmohan Singh. Okay, we are getting live visuals from Delhi. Prime Minister Manmohan Singh has gone to pay respects, and you can see, I think, Gursharan Kaur, wife of the late Prime Minister, and there's Home Minister Amit Shah as well, all of them going to pay tributes. The family of Dr. Manmohan Singh in attendance there as the Prime Minister comes to condole the family and pay his respects to the former Prime Minister. Okay, so those are the visuals coming in. We will continue to get you visuals from Delhi. There will be a lot of leaders going to pay their respects. Many of them are not in the country or not in town, and you will see them rushing back. So all those scenes will be captured for you, and we will present it to you. That was Prime Minister Modi and Home Minister Amit Shah paying tribute to the late Dr. Manmohan Singh. Okay, the markets are running away, so we have to cast one eye on that as well, especially the big stocks. Sudeep Shah is back with us of SBI Securities. Sudeep, what's the 10 a.m. trade?
Good morning, Lata. Lata, in the morning also we discussed that there was this long-short ratio which was oversold and that could trigger some kind of a short covering, and we are seeing exactly that thing on the screen right now in case of Nifty. So we feel that crossing 23,850 now, the first resistance has crossed, and now the Nifty is headed towards 24,000, 24,070 levels today, as well as it could happen on Monday. On the downside, 23,830, 23,850 now holds as an important support zone. And we feel that large cap stocks as well as select mid caps are coming back in flavor. So if stock specifically, if we see, then we feel that we should go ahead with M&M currently around 3,050, 3,055 zone. Trying to rebound from an important support zone, and this stock is positive on all time frames. So here, this could be bought with a 3,010 as a stop loss, and on the upside, levels of 3120, 3150 could be the potential targets. The second stock that we are betting on is we feel that could outperform the markets is Jubilant Foods. The stock has taken out its prior September as well as November resistances, which were closer to 708, 710 levels. It is sustaining well above that today. And the daily, weekly, as well as the monthly time frame, the chart is looking quite strong here. So this could head up to 745, 750 in the next couple of sessions. And on the downside, 705 zones can act as a strong stop loss levels.
Okay, all right, so they've got that. Thank you very much for the calls. Let's also revisit the big corporate news of the morning, corporate and market news really. The stake purchase by Ultratech Cement in Star Cement. Ultratech, remember, this morning bought almost 8.7% of the company's equity. We don't know what the intent is, from here on, but it definitely excited the stock. Star is up about 3%. It was up about 6% when we opened. Now it's, become a little more measured. And Ultratech is also positive. Sudarshan's here with more details.
So if I can say so, part of the deal of Ultratech Cement and Star Cement is done. In today's disclosure, Ultratech Cement has announced that it's acquiring 3.7% stake in Star Cement at a price of rupees 235 per share, and it comes to around rupees 851 crore. And the deal was done in the block deal window in which Star Cement has seen a change of hands for 3.7% equity. Now the question is, from which promoter Ultratech Cement has bought. Basically, company has not disclosed as of now, but what we understand that the Ultratech Cement has acquired from one of the promoters, and there are two major promoters. One is Bhajanka Group and second is Chamaria Group. So these are the two major groups which hold majority part of the stake in Star Cement. Now coming to the Star Cement. So it's a major player in Northeast market, and currently cement capacity is of 7.7 million ton per annum and clinker capacity is 6.1 million ton per annum. Now company has a target to increase the cement capacity by FY27 to 12 million ton. If we talk about as of FY23, it had a cement capacity of 5.67 million ton. By FY25, it's planning to increase to 7.67, and by FY26, it's likely to increase to 9.67. But finally, by FY27, company is expecting the capacity to increase to 12 million ton. Now, next question is on which capacity deal is likely to have been done. So now, if the deal is done at 7.67, then it comes to $152 per ton. And if the deal is likely to have been done at 9.67 million ton, then it comes to $120 per ton. Now the final question is, for the remaining part of the stake, by if Ultratech Cement plans to, will it go the India Cement way? Because if you remember, in the India Cement deal, in the first tranche, Ultratech Cement had acquired stake from Damani at a lower price, but later on it had to pay the higher price when it had acquired the stake from N. Srinivasan. So that we'll have to see going forward.
Okay, thank you very much, Sudarshan. We can't ask for more. That's the most comprehensive understanding of what's happening in the cement space and what will this new deal, this new consolidation in the cement space take the total capacities to. Thank you for that. That completes the first hour of trading, and the rupee has crossed 85.40. It's now 85.42. But the markets are at the moment in a cheerful mode 0.75 up, so it's 23,927, closing in on 24,000. So markets clearly in a cheerful note. With that, we'll conclude our stock market presentation in Bazaar and turn to the big news of the day, the passing away of former Prime Minister Manmohan Singh. Joining us now is someone who has worked closely with Dr. Manmohan Singh step by step in those momentous reforms of 1991. Joining us now is Dr. C. Rangarajan, former Reserve Bank of India Governor, and of course, Chairman of the 12th Finance Commission, Chairman of the PMEAC. He has worn so many hats. Dr. Rangarajan, thank you very much indeed for joining us. You as Governor and Dr. Manmohan Singh as Finance Minister led India through its most brilliant period. Can you just relive some of those moments and how those very difficult decisions of liberating the foreign exchange market and the government securities market were taken in your time?
Dr. Manmohan Singh, first as Finance Minister and later as Prime Minister, brought about some changes in the economy. These are, in fact, revolutionary changes. And he had both of them in abundant measure. Because it is not enough to have vision alone. It must be possible to implement them. And he did it with great ability. And he carried all the other people who worked with him at that time. I would say the most important event in 1990-91 was to take care of first the problem that we faced in the balance of payments area and bring about some stability before structural reforms could be introduced. And I would say the most important thing in this area was that it was not enough to solve the immediate problem. What he thought was that as we solve the immediate problem, we must also undertake reforms which will have the effect that such crises will not happen. Also, it is interesting to see that how the balance of payments problem was solved and how the reforms in that particular area were introduced. Earlier on, when we had a balance of payments crisis, we will go on to tighten the imports more and more, and that is the way we try to solve. But in this situation, in 1990-91, what we did essentially was, while we did take strong monetary policy actions, as well as other fiscal actions, we also thought in terms of introducing in the international bank. Why is it so revolutionary? Why are the reforms introduced by Finance Minister Dr. Manmohan Singh, along with others like me? Yes, really, that there are three important changes that happened. I will not go in great detail. He dismantled the system of licenses, permits, and controls that dominated the economy.
Yes.
He removed the barriers to entry and growth.
Yes.
Second, he reoriented the...
Dr. Rangarajan, we are not able to hear you, sir. I think that there's a network issue. We will try and redial the line. We're not able to get much of what you are saying. We will try and redial that line. In the meanwhile, I think we have a few more guests joining us. Perhaps we should take a quick break and continue our coverage. Perhaps we'll be luckier with the lines after the break. Welcome back. We have been speaking with former Reserve Bank of India Governor Dr. C. Rangarajan, who worked very closely with Dr. Manmohan Singh as Finance Minister in ushering those momentous reforms of 1991. Dr. Rangarajan, my apologies, the technology is simply not helping today. But let's get you on the phone line and try our luck. Can you tell us some intimate moments, something personal that you shared with Dr. Manmohan Singh? Was he a hard taskmaster as a finance minister, or was he actually, a friend in need?
Well, I think that at the time of the crisis.
Oh, I think we're not lucky. There is some kind of an echo. We'll do one thing. We'll try and dial Dr. Rangarajan a little later, maybe after 5-10 minutes. The lines are simply not helping. But we have two other people who know Dr. Rangarajan very closely. Joining us now is Dr. Sudipto Mundal and Ratin Roy. Of course, both of them involved with former finance commissions, but even otherwise very close to Dr. Manmohan Singh. Ratin Roy, of course, was associated with the 13th Finance Commission and was also in the Prime Minister's Economic Advisory Council. Ratin, good morning. Thank you very much indeed for joining us. Legacies, memories, share them with us, please.
Well, I suppose all memories are made looking at the present. And I think Dr. Singh's abiding legacy was his absolutely superb crisis management and his ability to get a wide variety of people, domain experts, global leaders, multilateral experts, bureaucrats, to actually do the work he wanted them to do without an inferiority complex. He was lucky in that sense, quite the opposite of the present Prime Minister, that he was a Prime Minister who had no political base, and for various reasons became Prime Minister without that base. People criticized him for that, but if you look at it analytically, that can be quite enabling in many ways. And I think he took full advantage of that enablement, first as a finance minister with no political base in 1991, and second, later on as Prime Minister. In the second role, I would say, he did a lot for foreign policy, as much as he did, again, in terms of crisis management, both in 2008 and in 2012. So his legacy would be one, I think, of a very capable crisis manager and somebody who demonstrated that good crisis management leads to good economic results in India. The economy is resilient if you don't mess with it, like we did in 2016. And what Manmohan Singh's legacy was to skillfully not intervene in the economy when required and to skillfully intervene in the economy when required, and do so effectively and to carry the room with him both nationally and internationally. I think that's his abiding legacy. If you brief word on his pre-prime ministerial career, he engineered one very significant reform in monetary policy, which people often forget, which is he appointed the Shukumar Chakrabarti Committee on to look at the working of the monetary and financial system back in the 80s. That was his responsibility as Governor of the Reserve Bank. And that report was absolutely epochal in the optimal functioning and improved functioning of the Reserve Bank and monetary and credit policy more generally, right from when Dr. Rangarajan was governor till a few years ago.
Yeah. No, thanks for that, Ratin. Actually, we didn't forget that. Early morning at 7:30, we started by saying that as governor, his first task was to invite Dr. Sukma Chakraborty to lay down the guiding principles, the fundamentals of banking regulation, and CRR, SLR, as we now know it, was put in by Dr. Chakraborty. Dr. Sudipto Mundal is also waiting with us. You knew him personally, Dr. Mundal. I think you all had differences of opinion on several things, but tell us both personal and professional experiences with him.
Well, I first got to know him. He was actually a professor at the Delhi School of Economics, and he would teach us international trade. By the way, that was also the subject of his thesis in Oxford University, and that was one of the earliest pieces of work when export pessimism in India was being criticized. So some of the key thoughts of trade reform that he was to engage in later were already there in his PhD thesis that he had done. Anyway, moving forward, he taught us, but he didn't teach us for very long, because soon after that, he started his long career in government. He was appointed as economic advisor in the Ministry of Commerce, and within a year, he then moved to become chief economic advisor in the finance ministry and so on, as you have been saying. Also, as you hinted, there was a time, by then I moved on from the finance ministry, and I was writing as a private individual. And I used to write about the need for having a more human face on the reforms. I was all for the reforms, but I thought that it could have been done with greater sensitivity to how it would impact the poorer people. And at that time, I do remember not so much him, but people around him. As you know, important people always get surrounded by sycophants of a certain kind. And I was getting a lot of flack from them. And I remember writing to him, saying that basically, people not being fair to me. And he wrote back a very kind letter to me, which I have preserved to this day, because this was something very precious to me. I did not then interact too much with him since I was outside the government. Occasionally we would meet. I later got to know his daughter Upinder quite well. Upinder and Vijay, his son-in-law, were good friends of mine. And mostly in his last few years, I would hear about him through them. And he had not been keeping very well, as you know. I also am very pleased to know that apart from the economic reform, which Dr. Rangarajan has talked to in some detail, and Ratin after that, you have actually talked about his role as RBI governor, because in each of these, as finance minister, as RBI governor, and as prime minister, he played a very important role in different dimensions. His big moment as prime minister was, of course, the nuclear agreement with the US government, which put India in a whole different place. And that has not been recognized as much as his role in the economic reforms of 1991.
Yep. No, I take your point, sir. There are many aspects and many sides to the contribution he has made. A long public career, and as Raghuram Rajan said, the economist's economist. So a great deal was accomplished in those 35 years. We have a string of dignitaries waiting. Thank you very much, Dr. Mundal and Ratin Roy, for sharing both your perspective and your personal interactions with the great man. Thank you very much for joining us. Well, we have to get back to the stock markets and the stalwarts who exactly know what Dr. Singh's contribution mean to India's capital markets. Joining us now is one such stalwart, Manish Chokani, Director, Enam Holdings, and of course, more importantly, a veteran watcher of the India scene. Manish, if you have to pay your tribute, your legacy of how you understand Dr. Singh, what would that be? Yeah, Manish. Manish, you can hear me?
Cracking.
Manish, you're able to hear me? No. Hello? I think we're going to do that yet again, trying to connect. Today has not been a great day in terms of telephone connectivity, but we'll bide our time. Let me perhaps just quickly go through what's happening in the markets while we are reconnecting with Manish Chokani. The markets really up and away. We haven't had such a good day in some time now. Markets look likely that they're holding on. The first hour's gains have been held on, and what's most important is at the end of 1 hour, the markets are at the highest point of the day, which means whatever selling, profit taking had to come appears to have come. I could be speaking too soon. We could still see some reversals later on in the day, but it does look like at the moment the markets are having a very good day. The important takeaways that we have got from our guests on Dr. Manmohan Singh himself, unfortunately we didn't get to Dr. Rangarajan very well, but he has reform contributions even before he became the Reserve Bank of India governor, and definitely from the Reserve Bank onwards laid the building blocks of banking and economic policy through the Sukumar Chakraborty report, and then, of course, the great 1991 reforms. Manish, I believe we are connected and you can hear me now?
Yes, I can hear you now.
Yeah, please go ahead. How would you remember Dr. Manmohan Singh and his contribution to capital markets?
Well, Dr. Singh, of course, had been RBI governor, and I was a young student who had just come back post my MBA from London. So this whole spirit of India opening up and being unleashed was so new and so unknown to people of what would actually happen. And even though I was a young chap, people just assume because you've been to London and he's from London and so on and so forth. We quickly coined this term of what we call the era of brains and brands is here. And as India liberalized and opened up to the world, we all are actually beneficiaries of that creation, which Prime Minister Rao and Finance Minister Manmohan Singh then unleashed. And you're seeing the big benefits of that coming to us, 35 years later, as we said today. And his career to me actually bookends my own career in a way that I started as a young student benefiting from him. And his other bookend is when he became Prime Minister and did the landmark nuclear deal with US and formed the rapprochement, which we finally had with the United States. And that unleashed the next layer of growth for India as well. I think those would be the kind of two seminal things we all would remember him for. And also the sheer fact that someone who comes from an intellectual background can rise to the highest office in the country with an absolutely unimpeachable integrity and complete humility, and the way he conducted himself, the standards he set for himself, and the seeds he sowed for all of us to be beneficiaries of. I think the nation can only just pay homage and be grateful and celebrate him for a life which he lived in a very extraordinary manner.
That's extremely well summarized, Manish Chokani. Thank you very much indeed for joining us and putting it so beautifully.
Thank you.
He was the creator of the middle class, of which we became members, the creator of the investor class, from which we all have benefited and for which India is now renowned as one of the biggest and perhaps the deepest stock markets, and it's able to extend this wealth management to larger and larger sections of the population. What Manish beautifully calls the brains and brands India that was unleashed in 1991. And I think what Raghuram Rajan and Dr. Subbarao told us early in the day at 8 a.m. is very important. In his career as Prime Minister, he ensured that the gains of 1991 were extended to a larger population. So when you had a COVID, what did we have as a social net? We had the Manrega and we had the Food Security Act, which allowed us, had already put in the administration that enabled us to give free grains or at least subsidized grains to a large part of the population, some kind of jobs and a social net for a large part of the population. So whether it is making of the rich India or whether it is distributing those gains, the contribution of Dr. Manmohan Singh will be etched in letters of gold for this generation and for coming generations. On that note, we take a break on Bazaar. Market action, of course, will continue.